The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, on Tuesday, we saw the release of USDA's quarterly grain stocks report and the small grains summary. Seemed like most of those numbers leaning to the bearish side of the equation. We're going to talk through things here on the show today, brought to you by John Deere Operations Center. They can give you real-time data and insights that will help you run your farm better. Visit Deere.com for more. Joining us for market analysis, Tyler Schau with agmarket.net. Tyler, good to have you back with us here on Market Talk, my friend. Hope all is well.
Everything's pretty good up here, and it's always good to visit with you, Jesse.
Well, let's get your initial takeaway from USDA's numbers on Tuesday. A red day in the grains, quarterly grain stocks, and small grain summary. You know, they're known for their surprises. I'm not going to say there was really a big surprise in Tuesday's numbers. At least I didn't feel that way, but it seemed like things kind of leaned to the bearish side. What's your biggest takeaway from Tuesday's numbers, Tyler?
Well, they did, and I'll be honest, this is probably not what a lot of corn producers are going to want to hear. I actually feel like corn held in impressively well for the news that we got. And I know guys are probably like, what do you mean we're down 6 cents? The quarterly stocks report was not friendly at all to corn price, and yet we only dropped 6 cents. So there's a few things going on if you go in and unpack it. And you and I visited yesterday on another program, and I actually said wouldn't be surprised if we don't see the ending stocks creep higher. And if you quizzed me on that, I would have said my assumption was we'd see the last year's yield increase, which has happened in the past. USDA will come in and raise that final number from January. So apparently it's not really a final number. It's just a number we use until we true up the end of the year. And so that was kind of our assumption, is that we might see that. And our reasoning, and we talked about this yesterday, was the corn spreads were just pretty bearish. Basis levels around the corn belt were not all that friendly. And so it just felt like there was more corn out there than the market had anticipated. So you would have thought, digging into this quarterly stocks report, that you would have saw maybe acres increase, yield increase. No change to the yield. We saw, I think, a 1.9 or 195 million bushel increase over what the trade was expecting on the quarterly stocks report. We saw 207 million bushel increase over the September WASDE's ending stocks report. One would have thought we would have saw yield increase. We didn't. They left yield at 179 point whatever it is. They did increase planted acres slightly, and they increased at harvested acres slightly. But if you do the math, I think that only increased 7 million bushels on last year's crop, where the entire balance of that ending stocks came from. This is what's going to probably drive people in our world nuts, is a decrease in quarterly fourth quarter feed usage. Like 26% year over year. And that's what's hard to true up, because they did not first, second, and third quarter feed usage, minimal changes. And then they come in and lower the feed usage in the fourth quarter 26%. It's really difficult to true up in my world.
Well, and you made a comment too about, what spreads and the basis and more has been telling us, and expand upon that a little bit more, because, USDA, however they got to their number, you mentioned with the feed side of this equation, not maybe what was expected, but, spreads and basis maybe has been giving us some of this indication of what we were going to see in this report here for the last couple of weeks, I think, Tyler.
Yeah, and that's the really cool thing to talk about before USDA reports is always what's the yield going to be? What's the yield going to be? And we've been making that case really for the last few months that we currently feel like the current yield, at 188, and they lowered it in the last report to 186 something on new crop is likely too high, especially with some of the early yield reports we're getting. It wouldn't be surprising to see that number come down. But we were also saying it feels like 179 from last January was likely too low on old crop corn. Just the way the cash market was reacting, it just felt like there wasn't much concern from the end user to try to get corn coverage or corn bought prior to the new crop. Like if we really had a 1.3 billion bushel carryout, there should have been a little more panic from the end user. You should have seen some big basis pushes in that last few weeks of the marketing year, and we just never really did. In a lot of areas, before combines were rolling on new crop corn, the corn dumps were 40, 50 trucks deep in a lot of areas around the corn belt, which just tells you there was a lot of old crop corn left in the bin. We heard that here in the extreme western side of the corn belt in western North Dakota, at one ethanol plant in my neck of the woods where they were still 30, 40 trucks deep at the corn dump in August and September. We're not harvesting corn up here in mid-September. So that's old crop. And to be honest with you, a lot of it, talking to a lot of producers, was 2023 crop. So there was just a lot of corn in storage that we knew about, and it just all boils down to, I still would argue that the crop was likely a little bit larger last year than what we thought it was, according to the USDA numbers that we got in January.
Now, you brought up the feed usage. I wonder if we should maybe bring in a little bit of cattle conversation here. I know feeder cattle were up sharply on Tuesday. Did that have something to do with the changes USDA made on the grain stocks when it came to the feed numbers? Do you think that was maybe the case there, Tyler?
That could be a little bit of it. The trick to the whole cattle side, and I'll die on this hill, is cheap feed. You can talk about the low cow numbers till you're blue in the face. I get it. I know that there aren't a lot of cows out there. The breeding herd's small. We've been talking about that for 4 or 5 years. The real key to this last run, when you do cost of gain calculations, when you do closeouts on a pen of fat cattle, they're just closing out at under $1 a pound of gain, and that all has to do with corn in the $4 neighborhood, right?
Yeah.
And so so yes, I do think some of what's going on in feeder cattle is just more confirmation that there is plenty of feed available out there, and very likely feed costs remain cheap as we move forward. If you just do some real rough math on what the government gave us, that extra 200 and some million bushels of corn is just going to go straight through to the carryout on the next WASDE report that we get here in a few weeks from the USDA. It's just going to add an extra 200 million bushels. If you try to remove that by lowering yield with 90 some million acres planted, you're going to have to see the yield estimate could come down 2 bushels without making a dent in where the carryout was last month. Right, at 2.1 billion bushel carry out. So,
well, I think to sum up the corn picture here, the last few reports, and we'll see if we do get that October WASDE with this whole government shutdown thing. I mean, that remains to be seen here, I think, but we presume we'll get that. It just feels like USDA hasn't been a big fan of corn here in the last few reports. It just feels like there's been plenty of negativity, I'd say, for the most part, thrown at this corn market, Tyler, and we've held up well.
Well, that's just what I was going to say. You could take the last 2 WASDE reports would have been seen as very bearish corn, and in both of those, I think by the end of the trading day, we actually traded higher and continued trading higher throughout the the course of the month. Now that did not happen today, but as I started off with, I'm amazed that we're only 6 cents lower on nearby December corn after we got this quarterly stocks report. So I do think that the market does not buy into a 188 yield out there right now. Most of the early reports, I'm not going to go out and paint the whole countryside as bearish. There's pockets where we're hearing some really good yields, but by and large, you know, I have a handful of customers in Iowa. That's where I'm originally from. And they keep telling me it's not as good as advertised. You know, the USDA's got Iowa at a 220 state yield. I do believe that's going to be a very tough number to hit, just given the early yield data that we're hearing. And by all accounts, you know, going into the really dry August, everyone told us the early corn was probably going to be the best because they did have such a dry finish to this crop. And in a lot of cases, the early yield reports we're getting is far below expectations and much below last year.
Tyler Schau with agmarket.net joining us here today on Market Talk, brought to you by John Deere. Let's go over to the wheat numbers next, Tyler. I think that was where the other changes were that maybe caught a few folks off guard. Higher all wheat estimate compared to pre-report estimates. The winter wheat number was higher. When you looked across the board at wheat stocks and the small grain summary and more, what was your biggest takeaway there?
Well, my biggest takeaway was the last thing the wheat market needed in the U.S. or the world was more wheat stocks. You know, that was not exactly a friendly number, and you can see it with wheat being down 12 cents. You know, we dug into it, tried to figure out where this came from. Again, it did not come from a yield increase. Didn't even, you know, the major driver. And this is kind of I hate to dump on anybody here, but it's kind of aggravating. Increase in winter wheat planted acres of 450,000 acres in the state of Texas. And I think total winter wheat acres planted of 773,000. It just feels like we should have known about those acres prior to having to look through a quarterly stocks report or the small grains report. Like, it feels like we should have known that information prior to September 30th. You know, we've been working with some of that, I believe, since May, some of that same data. So to come in and say, oh, we had found almost 500,000 acres of wheat planted and harvested in the state of Texas, just kind of is a little bit baffling, to be 100% honest with you.
Mm-hmm. Yeah, it's a good point. I mean, it's something to think about here when you're trying to comb through all of this data and make it all make sense. And to your point now, adding all of this to wheat stocks here, getting us to new contract lows on Tuesday, not a great look to finish out the month. And so now the question is, where do we go from here in a wheat market that has largely just, it's been tough. It's been a dog really all year long, Tyler, in the U.S.
It has, you know, we feel, you know, we work with a lot of growers of hard red spring wheat, and we feel a lot of questions about is the bottom in, and I've, you know, typically say, well, it's wheat, so no. Until they're giving it away for free, the bottom's not in. It has felt over the last month that there wasn't a lot of additional downside risk, but we clearly saw that today that we broke down. Now, we've been to these levels. I mean, yes, they are contract lows. They're not contract lows by all that much. So we've been to some of these lower levels within the last month, and you know, we've seen some value buying at those spots. Until we stop seeing the value buying, I'm going to make the assumption that this is kind of the floor in here. So if I'm a producer with a lot of unpriced bushels, I'm not panic selling the wheat here. I'm gonna, you know, if it's already in the bin, I'm gonna wait till I can maybe get some better pricing opportunities for it. But right. I'm not going to hold my breath for significantly higher opportunities anytime soon.
How about the soybean side? Let's finish out there as we look at the grain stocks numbers and more. And, you know, I look at November beans on the board, testing that $10 handle again here at the close, about a penny above it. But yet I look at the numbers and nothing jumped out at me as overly bearish on the soybean side. Did you see anything there, Tyler?
No, I would have said it would have been slightly friendly to neutral on soybeans on the stocks report. I think, I talked about the early yield reports on corn being a little bit disappointing. I would say the opposite is true on soybeans. The early yield reports on beans and I don't care if you're in Iowa, Illinois, or North Dakota, has been pretty good. So I don't right now foresee any reason for the USDA to budge on where their yield estimate is on the current WASDE report. I don't see any reason why we think that number should be any lower anytime soon. Might even be able to say right now, anyhow, that number could creep a little higher. Now, the caveat to that is the same thing I said with corn, where a lot of people said our early yields would be our best. We heard that with soybeans as well because of that dry August in a large part of the I states. The expectation was for that the later planted crops to have suffered more. And so we'll have to see how bean yields continue to trend as we keep plugging through harvest pace.
All right. So, what's your final takeaway on the grain side? We can touch a little more on the livestock before we wrap up. But as you assess the trade action for Tuesday, and we'll continue to digest these numbers, we're rolling into a new month, more harvest activity. We presume we'll have the October WASDE coming up next week. What's your biggest takeaway on the grain side when it comes to risk management here, Tyler?
Well, it's always to be proactive. I sound like a broken record, but buy puts, make sales when you can, not when you have to, kind of a mentality. And we tend to kind of be on this merry-go-round where the market does chug a little bit higher, gives us some decent opportunities. We're hoping for better opportunities, so we don't do anything, and then we get kind of these gut punches, and the market sells off, and we field a bunch of calls, and farmers are ready to throw in the towel. And so I try to remind guys, when we get those 20, 30 cent rallies in corn, which we have since mid-August, and we get those 50, 60 cent rallies in beans, again, which we did from mid-August, you've got to take action. You might not love the pricing levels. You might not love the option strategies that you got, but the producers that went ahead and did something, have got something to show for themselves right at the moment.
All right. How about over in the cattle again? Any other thoughts for you there on Tuesday's trade? I mentioned it earlier. Feeders up sharply, decent day in fat futures as well. Anything else for you when you look at this cattle complex right now, Tyler?
It's kind of the same I've been talking about for several months. Cash continues to lead the way. Your deferreds and the feeder cattle are severely underpriced with where the nearby is at. And right now the nearby is October, and it's currently below where the cash index is. So something's got to give. We've been saying that all summer long, and so far, knock on wood, the cash market has not given. The cattle numbers just aren't there. And now you're kind of getting into that sale barn run where there's even fewer cattle available. We already know the low cow numbers, but there's even fewer cattle available to go procure now because of the shift in more of these midsummer video auctions that take place. A lot more contracting has been taking place. So that calf run and the auction barns is getting even smaller, which just means anyone who's got to procure those animals is making it even harder to find those available animals. So they got to push the price up, try to pry them out of someone else's hands. On the fat side, same thing. Cash market, is when futures breaks, cash just kind of stays steady. So we are watching box beef. It has fallen pretty good over the last month, but as I pointed out, someone else just a little bit ago, we saw the same thing happen July. Box beef fell off pretty good, only to rally and give us new highs there at the beginning of September into August.
About the hog complex, kind of a tough day there to end out the month of September. Any notes for you and lean hogs?
Yeah, I mean, it does feel like maybe it's kind of end of the month, into the quarter. Profit taking hogs have put in some contract highs in recent days, so probably a little bit of sell off to try to take advantage of closing out some books here on September 30th.
Any other final thoughts you'd share with folks, or if folks want to reach out for a conversation? I'm sure the best way is going online, isn't it, Tyler?
Yeah, check us out on the website, agmarket.net. There's a contact page. You can find if there's a broker in your area. And I mean, yeah, today's not one of those days that's really friendly to be in the farmer's seat or my seat, but it is what it is. We live to fight another day.
Always appreciate the insight. Tyler Shao, agmarket.net. Thanks for joining us here today on Market Talk. We appreciate it.
Always good to visit with you. See you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.